Hello and welcome back to Off the Record with ETX Capital. I'm Andrew Sachs and I'm joined once again here in the studio in London by Dan Moczulski.
Thanks very much, Andrew. Good to be here.
Good to see you, Dan. And actually, we were following on from our recent discussion about technology and trading platform technology. I think, well, we both come from a technological background in this industry. We know that the technological changes that all traders and brokers and everyone involved in the electronic trading business is going to have to face a almost technology revolution.
Sure.
To the point where it won't just be a case of focusing on existing platforms. We will have to diversify and build into other areas.
Yeah. It's it's funny that I joined IG Group in 2000, and IG at the time was famous for spread betting.
It was. It was IG Index.
Absolutely,
yes.
Absolutely. So and I think the pioneer of the Stuart Wheeler, the grandfather
right.
of spread betting. So IG was very much a spread betting and CFD and FX house. But it's interesting now that kind of 20 years later, those markets are not actually that much bigger. I think the Investment Trends report used to report that there was 125,000 leverage traders in the UK. I think last year they announced 180,000 leverage traders, not much higher. But if we then look at actually how people trading in unleveraged products has changed, well, that has just boomed over the last 2 years, 3 years, 4 years.
Which is good from a risk management point of view.
Oh, absolutely. And I have to say, it's one of the reasons why I've worked in CFDs now for 20 long years.
Yeah.
One of the reasons that I wanted to join eToro is that their involvement with kind of physical equities and crypto, and similarly to ETX, how you've recently bought Oval.
That's right. Yes, exactly. And this is all part of there are two ways you can expand, especially if you have your own infrastructure. You can either do what eToro did, which is to develop your own and build it out, or you can build on what you've got by acquisitions.
Agreed.
So in this particular application, ETX chose to do an acquisition of Oval because it had a type of technology that we wanted that can integrate into the wider structure.
Sure.
So when ETX Capital then goes into a situation where it goes into the wider electronic financial services sector, we can build out like that and actually be part of a wider range of financial products, because I think electronic finance, or as you say, embedded technology, embedded finance, is the way of the future to a large extent.
Agreed. I'm really excited about this concept of embedded finance. The trading and investing industry has, over the last 20 years, been kind of preoccupied with this concept that you want people to open accounts, you want them to monitor prices, you want them to make a decision on what they want to trade on at any one time by reacting to a price movement or whatever it may be. But fundamentally, everybody wants to invest and make money. Now, this concept of embedded finance is working to remove the need for you actually to log on, select a market and decide what to trade. This concept of embedded finance is, and this is a cliche, but it's trying to help you make money while you sleep.
That's right.
And it's this concept of, you might have a reoccurring payment into your brokerage platform that automatically purchases an ETF that you've previously decided is an ETF that reflects what you believe the market will be. And, without you doing anything, you're automatically investing in markets. And I find that aspect to how we're growing as an industry really exciting.
It is. And it also helps build out this sort of almost peer-to-peer decentralized way of doing things, rather like how the blockchain was intended by banks, not by the Bitcoin people, but by banks like Goldman Sachs, who invested in that heavily. They didn't want the cryptocurrency stuff. They wanted the blockchain. They wanted the smart contracts and things like that, which is very similar to, that's called decentralized finance. But embedded finance is that, but aimed at traders, where you can go around doing your everyday things, and it learns your behavior, and then it will trade according to certain things at certain times.
We've got eToro have recently launched a debit card, and this debit card doesn't work like this currently, but hopefully it will in the future. So this debit card is good for adding money to the platform, and removing money from the platform at the moment. But what I hope for it to do in the future is your eToro account may have holdings in Tesla, holdings in gold, holding in an ETF that tracks various different markets. What I want to happen is if you use your debit card in Starbucks to buy a coffee, it automatically sells a small proportion of the ETF that you have to allow you to buy that coffee. And if you don't buy that coffee, then your money stays within the ETF and continues to work for you.
Yes,
and I find that way that it's almost like the market is going down two different routes. We've got active traders and active investors who want to make very deliberate decisions on what they want to trade. For example, the GameStop community who've absolutely aligned themselves with what GameStop is doing. And you've got this other market which is more passive, that recognises perhaps that it wants to invest in solar technology, or recognises that it wants to invest in electric vehicles, but wants to do it in a very passive way, where it's just using dollar averaging to invest every month in a different ETF. So it's really interesting how the market is growing at the moment.
It is, and I think the actual developers of the technology, we're going to get to a point where in the end, the trading community directs what the innovators are doing, rather than the other way around. If you think about 20 years ago, when there was still hardware in companies, and brokers had server farms on site and things like that, it was a different thing. Brokerages and financial companies that offered trading were waiting for a company to go up, and then they would trade the asset.
Sure.
Now you've got those communities like Reddit and so forth, Wall Street Bets communities, things like that, which are now dictating what innovators think of. We had you mentioned electric vehicles. This electric truck manufacturer a couple of months ago started to try, and it hasn't even made one vehicle yet, but it started putting out on those forums that it was worth billions, to try to get people to put in money so they could list it on a SPAC listing and then start trading it.
This community-driven market is something that is very new.
It is very new.
And as you say, it's I'm not sure yet, is it the companies that are influencing the community, or is it the community that's influencing the companies? And we've got this really interesting dynamic at the moment. So for example, as a pilot, eToro allowed its client base to vote in the GameStop AGM. Now, I will be the first person to say, I wasn't sure whether this would be popular.
That's a great idea.
Before the event. I really wasn't sure whether it would be popular because, traditionally in the UK especially, less so in the US, but traditionally in the UK, people weren't participating in proxy voting.
No.
They weren't participating in AGMs. And, you had this concept of activism with investing was only for the institutional market.
Yes.
But it feels now that it's coming towards the retail market.
It is.
And people were adamant that they wanted to get involved with GameStop. And I think the number was 63% of the people that held a GameStop position with eToro actually placed their votes, and we allowed them to vote in the AGM. So that's really interesting.
It is.
We've also got a situation now with AMC.
Another target of the Reddit community.
Absolutely. They launched a product for their retail investors, giving them free popcorn if they hold stock. So it's really interesting now, this world that we're operating in, where obviously the company reacts to what investors do, and now the investors are reacting to what the company does.
And the mainstream media here in England is now focusing, which you didn't ever see really before, on the institutional side, big public listed FTSE 100 companies where activist investor hedge funds are going in trying to kick the CEO out.
Sure.
That is now all over the news.
Yeah.
And it was never before. It's happened. It's not a new thing. This has been happening for years. It's a common tactic by hedge funds, small to medium-sized hedge funds, to go into a big company, get 3 or 4%, which is enough to have a controlling say at the AGM, because you've got so many public shareholders, and they come in and say, right, we're going to go, and what we'll do is we will take what KPIs, what has the CEO got to achieve here, and then Are they going to achieve them? Yes. Okay, so we change all the KPIs, then the CEO fails, we kick them out. And that's now all over the newspapers, whereas there's one every week in big blue chip companies. So it's getting people thinking, and as you rightly say, that's happening at the same time as this community-driven Reddit-style way of influencing the market. That's only been with us since January.
Yeah.
And you now have retail investors who can go in and actually influence a big public company's stock price. And even if they can't influence that, there's companies coming up with ideas that aren't even listed, bypassing the whole process of getting listed on a stock exchange with one of these empty shell SPAC company listings, becoming a London or stock exchange or NASDAQ, which is a kind of tech-favoured exchange. And all of a sudden you have a company that's gone from nothing to a $10 billion SPAC listing on NASDAQ, and you have then people influencing the way that company is run because it had nothing to start with. It's fascinating. It's the other way around to how it was a year ago.
It is really interesting, but it's, again, to talk about this community-driven approach, people are no longer just investing in stock because they want this return. They're investing in stock that they feel reflects on their lifestyle. They are deriving some form of pleasure or utility from actually owning the stock the market that they're engaged with.
If you look at the Tesla owners, they've all part of being a Tesla owner is not Tesla's not for car enthusiasts. That's for people who are into that kind of thing. It's an extension of the I'm an Elon Musk follower, and I'm a disruptor, and I'm trying to disrupt from the outside, and I want to invest in this Tesla stock so I can hold that. So when you see a Tesla driver, you don't think car enthusiast, you think he's got Tesla stock and he's a Twitter user, and he's influencing things. It's that kind of mentality.
Well, there's an element of the market that might be an extension of a brand, in that somebody who can't afford a $100,000 Tesla is now buying a stock. And that's how they can engage with the brand. So it's just dramatically different to how we would have been, say, 3 or 4 years ago.
That's right. And it's kind of taken over. This is the thing. We were talking about oil a while back. You and I talked about oil volatility. That's still volatile, but no one's talking about it. Even though oil is being sold at higher rates than ever, even now, even when the US and Europe and Scandinavia are at the leading edge of sustainable energy, and there's a big drive towards using less and less fossil fuel, but it's at the highest ever, and they're making more. Russia just put the Druzhba pipeline in to supply the United States with something like 450 million tons of oil in just 2 months, and despite the sanctions. So it's a demanded commodity, but no one's talking about it. Everyone's talking about these disruptive tech stocks where there's no end product. It's an ideology, and you can influence an ideology now. And even to a large extent, these SPAC-listed companies are a way of trading an ideology on a public exchange.
I think it all depends on the firm in question. So obviously you'll have firms that have been around for a long time that are listing on the stock exchange, and their process is very different to someone, a firm that's 6 months old that's having a SPAC listing. But it's the way that the market is at the moment is, as we said, very different to how it used to be.
It is.
I think we have to acknowledge, perhaps, when we've got these kind of more binary propositions that are either moonshots that will come off, or they're not. That means that they are volatile by nature. And I think in a way, the client base want that volatility. And I think perhaps actually it is something that's worth bearing in mind. And it is interesting that when you talk to millennials that maybe trade crypto or maybe trade these kinds of assets that from an outside perspective you might look at as either being valueless or growing incredibly strongly in the future, you have to recognise that everybody's approach to investing is different, and everybody has should have at least a diversified way of investing. So you might look at somebody who's just buying, say, Dogecoin and say, oh, that's crazy that they're investing in Dogecoin in that particular way. But actually, if that investment in Dogecoin is 2% of your investing wealth, well, actually, that's pretty sensible.
It is.
You know, and you can have a diversified portfolio. And in fact, eToro, because of the number of assets that we offer, we encourage people to have this diversified approach to portfolios.
Quite right.
You know, don't put everything
Quite
in one
right.
basket.
That's the right way.
You know,
And
sorry.
you know, this Dogecoin itself is a meme. That's a meme. That started off as a joke.
Yeah, sure.
So now you have the meme stocks, meme currency, meme everything. You have people making leaders of industry backing memes. That's astonishing.
But Andrew, it's this word that we keep talking about. It's this community that once it hits a critical mass, it moves away.
That's right. That's exactly right. So very interesting to see what happens with that in the coming months.
It really is.
Nice to see you, Dan. Thanks a lot for joining me.
Lovely to see you again, Andrew.
All the best.
Bye.